Welcome back. I'm Pratap here. Today is 25th March 2024. In this video, let us generate bullish and bearish trade setups for hourly income trade, and let us randomly pick up one stock from this list and we will analyze the stock. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos I kept in a playlist, supply demand zone price action course, at our NeoStock YouTube channel. Even I have provided the link to this playlist in this YouTube video description. You click the link, you will get into this page, and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we'll provide an update in that channel. Now let us get into the report generation. That is a bullish and bearish trade setups for hourly income trade, HIT. For hourly income trade, our higher time frame is 75 minutes, intermediate time frame is 15 minutes, and entry time frame is 5 minutes. Because entry time frame is 5 minutes, I am selecting 5 minutes. Because it is bullish trade setup we are generating, I am selecting demand zone. In this parameter, bullish or bearish setup parameter, at 5 minutes time frame, I am selecting the value bullish. And we don't want any pierced zones in the report generation. So we have a parameter pierced count. Let us set this value 0, 0. This is the last parameter in this page, pierced count. In 5 minutes, here 5 minutes time frame, let us set minimum value 0, maximum value 0. Indicates pierced count is 0. And two more parameters, zone achievement should be violated opposing zone. And a minimum odd enhancer score for bullish trade setup or bearish trade setup, it should be 12, the value 12. Now let's filter the stocks. So total 13 stocks are filtered. See here, entry time frame is 5 minutes. See the strategy, search strategy. Entry zone is demand zone. Your zone achievement is violated opposing zone. Odd enhancer score greater than or equals to 12. And in bullish or bearish trade setup, 5 minutes value we set bullish. And zone pierced count we set 0, 0 minimum max values. So from this list, let us pick up some stock. So let's select Infosys. And the good thing is Infosys high liquidity demand zone, high liquidity supply zone, and it is a fresh zone. And odd enhancer score is 14 for demand zone because we are selecting demand zone our trade. And see the RR is excellent. We have 0.22 risk and 4.12 reward. My God. Maybe 4 times reward you are going to get. Maybe close to 1:16 you may get the reward. But intraday, if it doesn't achieve that much reward, at some point of time we can exit. Maybe by using trailing stop loss concept, you can exit if you get an entry. That way you can plan your trade. Because recently you learned in our last training lesson, you learned trailing stop loss in detail. You can implement that concept. So remember, this is a HIT trade, hourly income trade. It's an intraday trade. First, let us draw the zones, and then we go to higher time frames and we can draw the zones based on that reference. So when is this demand zone is created? On 11/1/2024. 15 hours, 5 minutes candle. Let me select the stock Infosys. When is the date? 11/1/15/5. So let me use calendar. 11/1, January 11 at 15 hours. Oh, 15. So go to. So here you have so this is 50 minutes. So this is a ERC candle. ERC candle, our software considered it as a leg candle. And these three base candles, this is the way you can draw the zone. This is a demand zone. Let me change the color to demand zone. Because it is a ERC, even you can adjust the risk till the distal line of leg-in. This is also allowed for ERC candles. Either way, if your risk is within your manageable, you can draw zone like this. This is also allowed. And this is a 15 minutes HLQ zone. Sorry, this is 5 minutes, not 15 minutes. Sorry for my mistake. This is a 5 minutes high liquidity zone. Five minutes high liquidity demand zone. So this is our bullish trade setup. If price comes into this zone, we will take an entry. Then what is the supply zone? First, let's go to the latest date. Okay. This is today's date. So where is our supply zone? First, let us find the supply zone. 21/3, 15/5, 4 base candles. 21/3. This is 21/3, 15. That means almost closing hours. Probably somewhere in this gap area, you may find. See, because of the gap, these earlier candles, it is showing very small candles. Close the gap, trading view will display exactly. This is the problem with trading view. So this is the leg candle, 15/5. Yes, this is a leg candle. You have 4 base candles. This is your supply zone. Which supply zone? 5 minute supply zone. This is also high liquidity supply zone. And this is supposed to be our target. Because we are not planning as per high liquidities. We are planning as per the HIT, hourly income trade setup. Because our software displayed this as a high liquidity, we are marking. So currently prices are here. If tomorrow if price is down up to here, this is somewhere around 1492. Today is 15.8. Maybe Infosys, if it is down by another 14 rupees or 15 rupees, we will get an entry. Okay, this is about 5 minute zones. Now what we do, we'll go to 75 minutes, then 15 minutes, then 5 minutes. That way we have to draw the zones actually. Because already our software has provided these references. First we are drawing and doing in a reverse way. Now we are going to 75 minutes. But actually you have to draw first 75 minutes, after that 15 minutes, and after that 5 minutes. That is easy approach actually. Because we have data, this is easy approach for us. First we have drawn, and because we are drawing, one advantage is at the time when we draw higher time frame zones, easily we can identify this is low on the curve or equilibrium or high on the curve. We can easily identify. Now I am going to 75 minutes time frame. 75 minute zones you need to identify. Demand zones and supply zones. And looks like here some 75 minute zone is there. See here we have a drop, 1, 2, 3 base candles and a rally candle. That means zone confluence. This 5 minutes is there inside 75. If 15 minutes is also there inside, it is a powerful concept. because 5 minutes order flow is there. Moreover, the 5 minutes order flow is a high liquidity order flow. So this is an excellent trade. And we have a leg out is there, good leg out, and another leg out with follow through candle with gap, pro gap. So many things we are seeing, positive things. So this is just 75 minutes demand zone. I do one thing, I have a 75 minutes demand zone, I will give daily color. For 15 minutes, I will give 17 minutes color, so that there won't be any color confusion. Daily demand zone color I am giving for 75 minutes, light color. Okay, so this is a daily demand zone. Sorry, 75 minutes demand zone. Sorry for my mistake. 75 minutes demand zone. Then what is the 75 minute supply zone? Is there any here also we have? Yes. This 5 minute supply zone is there. Inside 75 minute supply zone we have a drop, 3 base candles and a drop. This drop is with the hidden body, hidden gap. I mean if you add the hidden body to the candle, this will be a drop candle. Exactly at the, see, both zones are exactly at the distal lines of their higher time frame zones. I am giving daily color. This is 75 minutes, but I am giving daily light color. Daily color means light color, compare it to 75 minutes color. This is 75 minutes supply zone. Very good. Next, one time frame lower, that is intermediate. But even before that, if you look into this, our 5 minutes is our entry. Where it is? It is low on the curve. Our 5 minutes is at low on the curve. Check the software. Is it showing low on the curve? Yes, LOC. See the curve. For the Infosys, it is showing the demand zone. It is showing low on the curve. See, supply zone is at high on the curve. The 5 minute supply zone. Because of these pro gaps, they are exactly fit with within high on the curve and low on the curve. Okay, fine. So what's next? 15 minutes. First let us draw 15 minutes. Is there any 15 within this area? Yes. See here. You have a drop, you have a base, and we have a rally. This is a 15 minutes demand zone. Excellent. We have 75 minutes demand zone. Inside 75 we have 15 minutes demand zone. The order flow we identified, the actual order flow. Inside 15 minutes we identified 5 minutes demand zone. What about supply zone? Do we have the supply zone inside this? Let us check. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. All these are all base candles. So we can't draw. Here we have drop, 2 base candles. Probably the supply zone may easily violate it because 15 minute structure is not good. But anyway, our trade is on demand zone, not on the supply zone. You have a valid 15 minute supply zone. This is 15 minute supply zone. Because 15 minute structure for demand for supply zone is not, I am not comfortable. All these are all base candles. Even though there is a 5 minutes good structure is there, that is not good enough to push. So that's why most of the times this supply zone may fail. Why I am saying may fail? Sometimes because this is a high liquidity zone, next time when prices enter, if institutions decided to hold the supply zone, they may create a new valid 15 minutes demand zone and push the prices. Next time again prices are retraces back, we will get an entry here. If that is not happening, this zone will violate. But anyway, our plan is here. So you have a good RR is there. Let us see what could be the RR. A little below stop buffer and little above an entry buffer. If you consider, still you are getting RR. RR is up to here. We are getting 1:6. 1:6 RR we are getting. 1:6 RR. So let me go to 5 minutes, we get clarity because we have given more buffers. The reason we are withdrawn from 15 minutes. But anyway, fine. Even still, if you keep, you are getting 1:6 RR you are getting. That is excellent. It's a very good trade, RR point of view. And the risk is also minimal in this zone. So this is a one good example, might be useful to you. So from this list, we have analyzed. A similar way, you analyze the remaining stocks also. Now let me generate bearish trade setup for HIT trades. Entry time frame is 5 minutes and entry zone should be supply zone and remaining parameters are same. Violated opposing zone 12, no pierced count. Let me generate. No stocks are available. Entry time frame is, oh sorry, we made a mistake. In bullish or bearish trade setup, we need to select 5 minutes as bearish. Bearish. Forgot that. Sorry for my mistake. Now let me generate. So these 5 stocks are filtered. Now you can analyze these stocks the same way we analyzed. Maybe some of these zones are already tested. Probably you may not consider those zones because they are tested. So this is bearish trade setup for hourly income trade. And the last report, let us generate the stop buffers for our reference purpose. So using ATR based stop buffers, let me generate. This is the list. You will be using 3% ATR. If you don't like 3%, you can also use 2%. 3% is my improved as per my software testing point of view. But actual recommended is 2% ATR. If you want to use 2% ATR, already you have daily ATR, calculate 2%. This value into 2 divided by 100, that's it. You will get 2% value. The ATR value into 2 divided by 100. So let me scroll down. I'll be giving few seconds. If you want to refer any of these values, stop the video. Pause the video. After that, you can proceed further. So hope this information is helpful to you for your further study and analysis. Please remember, this video, whatever the analysis I did, only for education purpose. Please read the disclaimer I have provided in the description of this video. So let's take a break here and we'll continue with our next video. Thank you.